The purpose of this budget planner spreadsheet tool is to help our clients prepare a budget of their expected outlays when they are retired. And the reason for this and the significance of it is we are often asked, and it's a very common question, when I retire, how much money do I need? And the answer to that fundamentally is driven by how much do you intend to spend, or how much are you likely to spend. Once you know that, you can begin a calculation process of how much you actually need. Now, the sources of income in retirement are generally, for most people, investments such as rentals, superannuation and pensions. Calculating income from superannuation and assets, even calculating pension amounts, can be quite complex because of all the rules and rates of returns that apply. But knowing how much you spend is something that, as a client, you should know. What you need is to think about it and then be given a tool to try and calculate it, which is what this budget planner does. So it has two key parts to it. It has the budget planner for expenditure, and it has an assets and liability data entry area, so we can determine and help then determine what your likely income will be. In the budget planner area, there are a whole list of expenses that you are likely to have, most common living expenses when for any family or for any couple, be it retired or otherwise. The key about being retired is there are certain expenses you probably won't have, but it depends. So, for example, there's a place here to enter your mortgage payments per month, though by definition you probably shouldn't have a mortgage when you're retired. If you think you're going to pay it off, then you would put that as zero. There's also an option to list expenses as either weekly, fortnightly, monthly, quarterly or yearly. This is important because a lot of people think of expenses in different ways, and different expenses are often thought of in different ways by the same person. So, for example, it's pretty common for most people to think of a mortgage payment as being monthly. On the other hand, home renovations and expenses are often thought of as being more as an annual outlay. So what the tool will do is allow you to do that. You'll notice what it does is it makes the yearly expense monthly. That's not because you're going to pay $42 a month, it's just trying to create an average. Over here you'll notice what it's doing is building a total picture as you enter into these fields of what your total expenses are weekly, monthly and yearly as a total figure. Go through this carefully and think about what you're likely to spend. Remember, you're retired, which means there are some costs you won't have, but there are other costs you will have, and a lot of the items mentioned here are relevant. So, for example, there's a listing of expenses for education, because, we'll just find where they are. Education is increasingly an expense that I'm seeing people pay, helping out with grandchildren and things like that at uni or school. There are insurances that people often pay when they retire. You still see people sometimes paying life cover and other type expenses. And then there are things like recreation, holidays, caravanning. Have a think about it. If you go through this carefully and you enter the information in these fields here and make sure you select the correct period for each expense you're putting in, it will build a total expenditure position. Now, effectively, I have that here set up. And what I've done here is quickly enter all that information of what might be typical. And what it's doing here is it's producing a number. In this case, it's $49,600 per year. That is likely to be, according to your budget estimate, what you think you are going to spend when you're retired. If you're going to spend $50,000 a year, you need to earn $50,000 a year. So that becomes the critical thing and the piece of information you need. If you then go to the asset and liability planner, and I filled this in as well, in here you enter what your position is as of today, the day you're doing this. And the reason is for that is because even though your expenditures are as per you're retired, if we know what your asset and liability position is now, as accountants we can do a rough estimate of what it's likely to be when you retire. For example, in this case you have a mortgage, but we will assume that will be paid off from super, etc. We can do those calculations. That is much harder for you to do. And what this does is basically allow you to put all that information in, and there's a little bit of a chart here to try and give you a picture of what you're entering. So in this case, here are the total assets, there's the negative for the liabilities, and that's so-called net equity. What we will do with this information And the agenda behind it is we now are in a position where you've told us and you thought carefully about what you spent. That is really important and it's a very valuable piece of information. People will spend thousands of dollars engaging financial planners and other financial service professionals to try and work that out, when in reality, if you think carefully, it's not hard. If we know what you intend to spend, we can do a quick calculation based on what the pension rules are, what your asset and liability positions are, what your superannuation holdings are likely to be, what the earnings rates are likely to be. We're not talking here about where to invest your money. That's not the issue here. We're just trying to put you in a position of knowing roughly when you retire, how many assets you'll have, what pension you're likely to get. We can look at issues like your longevity, because there are calculations for life expectancy, and then we can give you a critical piece of information in a report. And doing that report is not expensive because you've done the key work here and have done this carefully. And call us if you need help filling this in. We can give you a report that will basically say, in this case for example, you are intending to spend $50,000 a year. Your asset and liabilities, your pension entitlements under current law should give you an income, say, of $60,000 a year for age 65 to 85, whatever. Therefore, your sort of basic thinking about how much money you're going to have when you retire is consistent with your asset and potential income position from government sources, etc. That is a critical piece of information. It gives you some sort of confidence that you're on the right track. Now, having got that information, you can then become more specific about what you think you need to do. For example, you may want to obtain some specific financial planning advice about where to invest money, how to pay extra super, all sorts of things. That can all be done. You can talk to your tax accountants and us about, the tax issues surrounding super, what's the best way to structure rentals, all sorts of stuff. You can decide that later. The agenda here is to give you a tool to help you figure out the basics first, because in a lot of cases it's getting this information that's the most important. Review what you have, try and build up a picture of these expenditure and asset and liability items. Ring us if you need any help. We have a copy of this sheet here, of course, and from that we can then produce a report, if required, to help you get thinking about these key issues.